Generating traffic and sales can be a challenge for online merchants. But selling on the Walmart Marketplace puts your products in front of millions of customers who shop on Walmart.com. And right now, sellers who join Walmart Marketplace can save up to 50% on referral and fulfillment fees for the first 90 days. So get started today. Head over to marketplace.walmart.com/savings. That's marketplace.walmart.com/savings. Welcome to Ecommerce Conversations, a weekly podcast from Practical E-commerce, hosted by entrepreneur Eric Bandholz.
What is going on, Internet? Eric Bandholz back again with another E-commerce Conversations. I hope all is going well on the other side of the Internet. On the other side of the table from me, a computer. Yes, I'm back to monologue world. I think at the beginning of this year, I did a monologue talking about 2022, how that was a challenging year for us. And I got bad news for you guys, or really more bad news for me. 2023 is off to a terrible start. In fact, probably even worse than 2022. I'm going to dig into the problems, and really I want you to think about this quote. Idiots, they don't learn from their mistakes. Normal people, they do learn from their mistakes. And brilliant people, they learn from other people's mistakes. The point of this conversation is to kind of share some of the mistakes that we've made with our business over the past couple of years, how it's put us in the position we're at now, which is not good, and how we plan on getting out of this position, kind of moving forward in the future. The point of this is not a pity party. It's not for me to be like, oh, woe is me, because the reality is business is simply just a series of problems, and the valuation is the point of the problems that you've solved, or the accumulation, the total sum of the problems you solved and how hard those problems you solved. And in my case, a bit of business is creating your own problems and then solving those problems as well. So I've got a knack for doing that. So I'll talk about some of the problems that I've created, some of the problems that we're working on solving now, and where we're kind of going. So, before I really dig into it, I kind of want to talk about why I'm in business and why am I doing the things that I do. I think the beauty of business is there's so many different ways to build a business, so many different reasons to build a business. Some people build for ego, some people build to change the world, and some people build for freedom to do their own thing. Some people build to get filthy rich. I am building for freedom. That is the thing that draws me most towards entrepreneurship, is being able to tell my own story, write my own story, serve customers who I want to serve, be around people who I want to be around, make products that I want to make, and invest in it, whether it be time or resources, in a way that I want to. That's really guided us in a lot of the decisions we make. We don't have any debt. We're bootstrapped. We don't have any investors. And I'll talk a little bit more about that and how that's kind of played into the role at business, because it's really easy to listen to a lot of podcasts, and every guest who comes on is doing remarkable things, and they're talking about those remarkable things. But sometimes after I hit record to stop the recording, things are not as good as it sounds on the podcast. And it's easy to listen to podcasts thinking that everyone's crushing it. Meanwhile, you're struggling and things aren't going well. And you're wondering like, man, Ridge Wallet and Sean, they're doing 8 figures or 9 figures, and they're just killing it, and they're having their best year ever, and this company's killing it. They're having this best year ever. They've only been in business for 2 years, and they're already doing millions of dollars. Like, what am I doing wrong? And, you don't know what the warts are of the business. You don't know the challenges they're facing. You don't know if they're, right around the bend or right around the corner from facing, catastrophe. So it's always been a goal of mine to try to bring guests onto the show who are at points in their business where shit is hitting the fan. And, it's funny that those are the hardest guests to bring on, because no one wants to talk about the shitty days. So I figured I shouldn't be a hypocrite. I'm going through some shitty days. Let's talk about it. So the problems that we face, I can break them down into 3 primary categories: product, marketing, and operations. It's been a, Murphy's Law of calamities for Beardbrand this year. Anything that could go wrong has gone wrong. Anything that could be a hurdle has ended up being a hurdle. There's been very few wins. And when you're stacking L's, month after month after month, it really gets taxing on your ability to want to continue, really, for lack of better terms. You start thinking about, is this right for me? Like, am I still going to run this business? So anyways, let's dive into the problems. So I think a lot of this can stem back to 2021 when we lost our growth marketer. He went to a competing company. We were kind of at our peak at that time. We were growing pretty aggressively through paid and through a series of, well, I guess let's talk about product first, the problems we had with product. So really a lot of product has been linked to operations. It's been linked to marketing. So I guess I can't talk about it exclusively from a funnel perspective, but from kind of an operational perspective, Beardbrand has been in this Goldilocks stage. And I say that in the least positive way ever, in the sense that many of the contract manufacturers we'd reach out to for producing our product would have really high MOQs for the volume that we're doing. And the ones that could kind of fill our MOQs didn't have like the quality control that we were looking for a business. So it was this trade-off between, higher QC and higher MOQs versus lower MOQs and maybe not like the operational excellence that we were hoping for in a manufacturer. So what we did from a product perspective is try to streamline our SKUs to have fewer SKUs to be able to handle higher MOQs and kind of churn through that. So we cut 3 of our fragrances and streamline, 4 products down to 2 products with the hope that less is more. We could order more. We could go through the inventory. I still generally think that's a good strategy. I'm a big fan of, cutting off your poor performing products. I'm a big fan of streamline. I kind of like the idea that every product that you sell should be doing $1 million and setting up a business around that. Of course, you're always going to have those that perform at a higher level than others, but I don't necessarily disagree with the strategy, but I will kind of talk about how that ended up not being the right strategy with how it relates to our manufacturer products. The other thing we did with the product is Target was a big source of sales for us. We sold quite a bit on Target. We performed pretty well in Target as well. And we wanted to get more aggressive and try to offer a product that was just like simply a no-brainer to go with, like the best bang for the buck. So we made this strategy to change product, kind of like our product value proposition, where we used to be more of like a premium product to be more of a, like high value product. So basically what that meant is like we repackage our products into bigger containers at the same or lower price. So on a per price ounce basis, like we dropped the prices when everyone else was raising the prices. So the hope in that strategy was we would increase volume as well, which would help with our MOQs. We would drive more sales and we would, kind of the higher volume would justify the lower margins that we now had in our products. We also switched to aluminum packaging from glass and plastic packaging, which just kind of like, I don't think was the wrong decision, but when it's kind of factored in with all the changes all at once, it starts to erode trust with our customers. And then finally, we've had sourcing issues going all the way back into COVID, which required higher, like essentially ordering further out, more capital tied up in products and POs, and manufacturing issues, which I'll kind of talk about in operations. And then, sourcing issues with some of our products, like we could no longer access certain ingredients for products, which, like I said, everything that could go wrong could go wrong. So going back to what I said earlier with our growth marketer, we lost them in 2021. Long story short, we changed our focus from growing through PPC to growing through organic content. So that meant our YouTube channel and to a certain degree affiliate marketing. We leaned on that and ultimately we ended up killing PPC. I think that, clearly that was the wrong decision. I think, in hindsight, what I would have done is when we lost our growth marketer, tried to work to hire to replace that. The mistake I think I made was I moved to an agency and push that out of house. And agencies are great, but I feel like you always need to have like someone driving the bus, and you can't expect an agency to drive that bus for you. They can certainly, maintain that bus and keep it moving forward, keep it going, keep it filled, but it needs a driver. And that driver to me is an in-house growth person that you need to have on your team. So mistake number one was we didn't replace that person. We should have done that. What we saw is like a general decline in the performance of our PPC to the point where we just kind of gave up on it because it was no longer profitable. The other challenge we faced was in focusing on our organic content. We rolled out some, in my opinion, the best content we've been producing yet, but YouTube kind of went through this shift towards shorts, and we were leaning into long form, and we did see some success with shorts, but shorts also didn't drive awareness for the brand or sales to the brand. So our long form content, we invested in organic content, and our long form content, long story short, like views went from, let's say, 5 million to 1.5 million. So a big chunk of our organic awareness was severely impacted by our shift to organic. So pretty much all of our marketing fronts weren't working. We have gained some market share from affiliate marketing. We have had success with that. We've been able to land some good partnerships with notable publishers. So that's been going well, but it's, in my opinion, it's a slower investment type of thing. We haven't seen immediate responses to where, it's really breaking even. We do have the cost of the person managing that and paying for that and seeing the response. So I still feel like affiliate marketing is an opportunity for us, but it's not working in a way that could, fill up the top of the funnel that we're seeing. In addition to marketing, I guess we rolled out a new website. We kind of changed some names of the products. I knew that these were going to impact sales negatively. I knew we were going to lose customers by eliminating fragrances. I knew we were going to lose customers by streamlining our product offering. I knew we were going to lose customers by kind of, changing our branding. We went to more of this, from this kind of like classical modern style to this more futuristic. And to a certain degree, like the problem that was solving is just like my energy and connection to the brand. So like the question is, should have I just stepped away from the brand, had someone else run it and kind of let it go? Would have we been in a better position? I don't know. I don't know if that would have been the case, but at the end of the day, going back to why I'm building this business is like, I want to work on the business. I want to enjoy the business. I want to enjoy the products we're working on. Work for me is enjoyable, despite the fact that we're facing all these problems and adversity currently. So I want to be excited about the things we're producing. So I think that was the right decision, knowing that we may see a step back. That's okay. The product sizing, I think, was a mistake to lower the price, increase the volume. I think it created the people who thought Beardbrand were expensive still think we're expensive and aren't buying from us. The people who are going to buy from us no matter what, they're still buying from us, but now they're paying less. And then it didn't drive, like, because we weren't really doing PPC, we weren't doing like aggressive growth to be able to get out in front of enough people to drive sales. So effectively, we cut our margins and kept volume the same. So that made it a lot more lean business. And the way that the math checked out was through growth, not by staying the same. So yeah, that pricing and volume play ended up being the wrong move. Should have kept the prices higher and leaned into, being a premium brand, especially considering that we ended up losing Target. So we made these changes for Target and how our Target offering would align with our beardbrand.com offering. The lesson there, don't build your business around Target, maybe stick to your guns. Operations. So I talked about how we streamlined our offering to, hit the MOQs. So we had, let's call it 6 fragrances. So we'd have to order an MOQ of 6 fragrances with our manufacturers. And then when we changed down to 3 fragrances, you know what they did to us? They doubled our MOQs. So effectively, this strategic decision we had to lower our inventory carry costs was completely avoided. And our goal to lower inventory, didn't happen. So we continue to throw more money into inventory. We continue to order further out because of supply chain challenges and the speed at which products would get to us. It's been a frustrating thing. In addition to that, we switched to manufacturers who promised us essentially no MOQs. We got on board with them. And then right when we got on board with them, they're like, oh, no, you know what? We changed our mind. We're going to have to do MOQs now. So they kind of pulled the rug out from us. In addition to that manufacturer overheated our products, which resulted in the products not meeting our expectations for performance and having tens of thousands of dollars tied up in multiple products that, for lack of better terms, are unsellable. The loss of Target resulted in our 3PL costs going through the roof. We paid essentially like a retainer for this certain software to be able to manage our connection with Target and our fulfillment house. So we're paying outrageous costs for fulfillment costs. I would argue that we're paying twice what we should be paying for fulfillment and, packing materials and UPS or USPS shipping rates. One of the big mistakes that I feel like we've made and how we're correcting is, to a certain degree, working with a 3PL. There's kind of this challenge of like out of sight, out of mind. When I order, so many units of bottles or so many items of oil, like being in a 3PL, I don't see it. I don't see how big that is. I don't see how much space this is taking up. I was chatting with another D2C founder who does their own fulfillment, and that scarcity you have to your own office forces you to make better decisions for the company. Just like bootstrapping forces your company to make better decisions for your company, having a fixed scarce space makes you say like, hey, do I need to keep this items? Should I clear out this stuff so I can make room for new products? Do I really want, or can I really afford to order this many items? Or should I figure out different solutions? So we've had an incredible gluttony of inventory and carry for the amount of volume that we're doing. And then, last year, if you caught my last episode, we ended up being more profitable in 2022 than 2021. So we grew our profitability in that despite a drop of revenue. And I think what we're dealing with now is basically we've been gliding down softly. And because we've cut so much cost, we were able to, in 2022, be more profitable. But you got to flap your wings or eventually you're going to crash into the ground. And that flapping of wings costs money. And I think like to a certain degree, like 2022, we were collecting profits, but we weren't helping the business, stay level. It was eventually going to glide and crash. And we got fortunate that we had some pretty nice influencer campaigns towards the end of the year in November, December that maybe masked or disguised the reality of where the business was that we didn't have a good funnel built up and we weren't driving awareness to our brand in a way that was sustainable and profitable. So when the calendar year flipped over, we really saw like the rug come out from under us in terms of revenue. Revenue just like dropped off a cliff, like almost like our website was broken kind of thing. It was like that fear that you have as an entrepreneur that it could all go away was exactly what was happening to me this year and has, kind of continued to happen. It's been an incredible drop in performance to the likes that I've never seen before. And through the challenge, the mistake of making so many changes, a new website, new packaging, new product names, killing fragrances, killing PPC, focusing on affiliate marketing. Like we did so many changes to the business that you really don't know what it could be. I mean, it could be all of them. It is all of them. Like what was the one single thing that we did wrong? I can never tell you because I did so many changes all at once. And, that is a lesson I think you could take away from this is like, if you're going to make iterations to your business, don't make fundamentally huge changes in a short period of time. So we've eroded a little bit of trust with our customers because of the change of the packaging, because of the change of the SKUs, because of the quality issues that we've had with the manufacturing changes. in our manufacturer not delivering products, and because the reality that we literally couldn't make one of our fragrances because the materials were not available. So it's just been L after L after L after L, loss after loss. So we started off the year super bloody, losing money January, losing money February, losing money March, losing money May. And, you lose money for 1 month and you're like, well, we'll see how this rides out. Is this just a little blip or is it a trend? And you kind of kick that can down the road. And by May, it's clearly evident that all shit's gone to hell. You're going to be out of money in no time. And then you couple this in the fact that we were pretty profitable last year. So we had a huge tax bill. So we bumped some tax bills on top of losing an extreme amount of money in the first quarter. And the business is not fun at all. Let me tell you, solving the problems of growth and out of stock issues and, warehouse spacing issues are a lot more fun than, we're out of money kind of thing. Yeah. So that's been my year so far, is facing those problems. Fortunately, I record this episode not completely in panic mode. In June, basically what I could say we did was we plugged the holes of the boat. So the boat is no longer sinking. We had to make a lot of cuts. We had to cut a lot of hours to our team. The time they were putting in, we essentially found any contractor who we were working with and we cut that. We put a pause on ordering products, trying to clear through inventory to generate cash and cash flow, moving a little more positively. The good news is we have a ton of inventory. The bad news is we have a ton of inventory. The good news is we have a ton of inventory. So we're working through, selling that inventory, working through growing our Amazon channel and trying to generate revenue with that, with our target inventory that we had as well. So there have been a couple of wins in June in the sense that we're no longer paycheck to paycheck. We're back at this, we can breathe a little bit and we can make decisions that aren't based on fear of it all going down to zero. So as we move forward, what are we going to do? Well, the things that I learned in all of this is, one, I still got a pretty good business. Even as it goes down to its quote unquote current zero, that's still a multiple 7-figure business. And a multiple 7-figure business can give you a good life. It can pay for your bills. It can give you the freedom. It can give me everything that I need in life, which is, the freedom I'm looking for. Fortunately, my house is paid for. My debts are pretty low. I can live pretty modestly from a business. I don't need, to make $500,000 a year or $1 million a year, anything like that. I can live pretty leanly through these lean times and, get it to the point where maybe it is a little more healthy. So, the business is pretty good. But also the other thing that I learned is I think it's important in building a lifestyle business that I am more connected to the business. Part of the reasons to work with a 3PL, part of the reasons to work with contract manufacturers is it allows you to kind of operate the business from anywhere and everywhere. I think that was a mistake. And what I'm doing, the way we're solving it now, is we're working to bring in our 3PL in-house. We're working towards bringing our manufacturing in-house. It would have been nice to kind of gradually build those up over time rather than, try to learn them all at once. But the goal of 2023 is to learn how to manufacture, learn how to distribute our products on our own terms and in a way that, we don't have to worry about working with contract manufacturers who, really feel like they didn't want our business. And I can tell you from an operator standpoint, there's no worse feeling than working with someone who's producing your products and they don't care about your business. They're like, you're too small for us. I really don't care. We're not going to serve you at all. We're going to push your PO down the road. We're going to take 9 months to produce your product. That is a terrible feeling. You want to work with partners who absolutely love your business and want to do anything for you. So I think that's kind of another lesson is if you have any of these partnerships that, they're essentially treating you like the redheaded stepchild, you have to leave them no matter what. And even if that means you bring it in-house and do it yourself, I think that's kind of the lesson that I had learned from that as well. So bringing this stuff in-house is going to give us new, creative opportunities from a marketing perspective, also more control, more QC, more nimbleness in our business. We're essentially a small business. Up to this point, we're a small business that moves at the speed of a Fortune 500 company. So we're moving slow, we're lagged by excess of inventory, and we're not nimble. So by leaning out our manufacturing, it's going to give us a lot more opportunity to act like the size of the company that we are. The other good news is I run a company really conservatively. So we carry a ton of cash. Oh, I should say we carried a ton of cash because we went through all that cash. We went through all that cash with our losses and paying our taxes. However, if we didn't carry that cash, then I would confidently say the business wouldn't be around. Like we would literally not have the money, or we'd have to go down like the debt financing or bring on investors. So we've been able to still maintain our independence. We haven't had to raise any money. We haven't had to pull in any outsiders. And that's been nice that we still maintain our freedom. So at this point, I've got to build that cash reserves back up, which means making sure that the company continues to be super lean and profitable, even if it is not at the top line that I'm wanting it to be at. And then we've also gone back down the PPC route. So I've been fortunate to find a new PPC person who's running our paid growth, and we're going to focus on building that funnel up and trying to get that flywheel going. It's been really challenging for us, but we can produce content well. We have 10 years of validation behind our products. We have tens of thousands of happy customers, tens of thousands of 5-star reviews. So we have everything in the works that should allow us to be successful in acquisition. We just have to build that system to optimize it over time. And I'm excited that we have a person in-house be able to do that. So I do feel like the worst is behind us, but I also don't think we have an easy path ahead. The idea of building our own manufacturing facility, the idea of doing our 3PL are big operational undertakings. But I think it's those hard problems that we solve that will allow the business to be more sustainable and, anti-fragile, which is one of the words that they say. So if you follow me on Twitter, you may have seen things about how my 40s have been terrible. It has been a hard year. And in addition to business problems, I've been working through some personal challenges and, my parents aging, parenting challenges that come along with life as well. So it's been not fun, but I am grateful. I still have my health. I still have a great business, even though it's much smaller than it used to be. It's still a great business with great people working on it. And I still am able to wake up and fight and to solve these problems, which gives me energy. I'm going to wrap it up with this. I lift weight in my garage. If you follow me on Twitter, I do a lot of weights. There's this plant, some kind of leafy plant. I don't even know what kind of plant it is. And my wife put it out in the garage. It wasn't being cared for. Essentially, it turned brown and it died. As it was turning brown, I was putting water in it, hoping that, maybe I could rejuvenate it. And this is all happening this year too. And the plant it turned brown and it died. There's nothing there. There's no life there. I'm like, this plant is like an indication of what my life of this year has been. Just brown and death and failure. And I continue to lift, and I go in there and one day, and then I see some green sprouts coming out of it. And I continue to put some water on it, and I'm patient with it, and a couple more sprouts come up. And I put some more water on it, and some more sprouts come out. And sure enough, the plant is alive. In this beauty, to me, this is the most symbolic plant and experience I could have. And it's so simple. But these beautiful green shoots surrounded by just death and destruction of the previous leaves that have fallen down is really the reminder to me that I can rebuild the business. I can, make it strong. All I need to do is put that water on it. I need to focus on it, and it will come back. There will be a rebirth. So that's where I'm at now. I'm in the rebirth mode. It's still hard. It still needs a lot of water. It still needs a lot of energy and effort. But at the end of the day, I'm going to have a beautiful, thriving plant, just like the business is going to continue to be beautiful and thriving. So hope you guys enjoyed it. If your 2023 is anything like mine, I commiserate with you. It's been terrible. It's been a terrible, horrible, miserable year with nothing going right. But despite that, I am here to fight. And if you're listening to this podcast as well, you're also here to fight. So you have that ability to solve those problems. You know, the problems that you're given are given to you because you have those abilities to solve them. So I want to encourage you to keep on. And to everyone out there who's absolutely crushing it with no problems, you know what? Screw you. I don't want to hear from you anytime because it's not been fun. But as always, this has been E-Commerce Conversations. I hope you guys have enjoyed it as much as I did. I hope you learned from my mistakes and you end up to be brilliant individuals rather than making the same mistakes that I made. Cheers. Keep on growing.